Hey guys, Brenna here, CEO and co-founder of The Mortgage Shop. I just wanted to come and kind of explain what the market is doing right now and where I think professionally the market is going to go. A lot of our clients are saying, asking us, well, what should I do? Should I purchase now? What would you recommend? Some realtors have reached out and asked from a financing standpoint what we are seeing. For this past week, and you can look at the date recorded on YouTube, this past week, we have seen a decrease every single day in the prices of interest rates. I have not seen a decrease in prices every single day in interest rate except during COVID. I believe I did see a price decrease every single day during COVID. At that time, it was crazy because rates were changing 6 to 8 times a day. So it's really hard to gauge from that perspective. But considering that we're not in a pandemic, that is a very good sign for us. You will see in the media that a lot of spending has declined and they may paint it in a negative light. However, that's good for the real estate market. The interest rates aren't going to drop drastically. However, the cost of them have dropped and we are seeing lower interest rates for our buyers. We're constantly having to reprice and sending them updates every 3 days, which is great. The Fed will meet again this month, December 2023. And if they pause again, this will be even, I would say, the cherry on top. Even if they don't pause rates, if they increase a little bit just to kind of send it off with a bang, I don't really see it affecting our rates as much because the secondary market, we do have to sell to the secondary market. So all of these investors that have these loans that bundle them in together to sell to the secondary market, they have to make sure they can sell to the secondary market. So the rates that we're seeing already have that built in and they're already preparing for that. So sometimes when the Fed would increase rates, you may see actually rates would drop. And that's because they were already expecting that Fed to increase rates. So they kind of go with the market and make sure that they can still sell in the secondary market. So I wouldn't worry too much about that. Prices for the properties in these tourist markets. So take out, any primary residence market that's in the middle of nowhere. Just look at these rental markets, preferably the rental markets that many people can drive to that are easily accessible, like the Smoky Mountains, for example, on the East Coast. Prices have not decreased tremendously. You may see a little bit of drop in price, especially if the sellers are desperate and they want to get out of it and they want to go do something else with their money, possibly invest somewhere else. You may have seen the prices drop a little bit, but not on most of the purchase transactions that we have seen this year. They have been holding steady. They have been holding steady while rates did increase. So it was harder for you guys to cash flow. However, these rates are slowly starting to drop. When rates drop, when you run the numbers at the original purchase price, you're like, hey, it cash flows now. I'm going to put in an offer. Well, all the other 30,000 people that are probably looking at the same property as you or the same area as you, let's just say same area, because a lot of people do look at these tourist areas, you are going to see an increase in these offers. During this time, you may have not had to compete with many offers, which is great. You might have been asking. You might have gotten seller credits. You might have gotten a little lower than asking, which is great. You will not get that in these tourist markets when rates do decrease. The price actually will probably go up because tourism year over year has increased, even if it was just a small percentage increase. Prices will either stay the same or most likely go up. When they go up, you might have a lower interest rate, but your payment per month will then be higher if the purchase price goes up. So keep that in mind. You're most likely to get an accepted offer right now while the rates are still kind of high. You will cash flow a little bit. Get an accepted offer now. Hold that property. When rates do lower, make sure you're not in a loan that has a 5-year prepayment penalty, for example. Refinance when it is at least maybe 0.75 to a point lower in interest rate, then refinance then. And then guess what? You have your property. So it's called buying and holding. You have that piece of equity. You are in a tourist market. You're now cash flowing. You even have a lower rate at that lower purchase price that you got in at. And then you're not in this rat race of all of these buyers coming in at lower interest rates. I hear a lot of people, well, I'm waiting for the rates to lower. Or so is everybody else. And so they're going to now be competing. During COVID rates, I'm just going to call them COVID rates, I saw people offering 100,000, 150,000 over asking price. And like the numbers didn't even make sense at that point. I don't know what these people were thinking. But the same thing on a very much smaller scale is going to happen. People are going to start offering $20,000 over asking, $30,000 over asking, even up to $50,000 over asking, waiving contingencies, things like that, higher earnest money, whatever it is. Keep that in mind, because all of these people are going to start offering because they want real estate. It's very well known now that you can invest in real estate and make money. That's why if you can buy now and make the numbers make sense, you should buy, hold for 6 months, watch the rates, watch the market. As soon as it hits 0.75 to a point better than the current interest rate that you have, try to refinance into a lower rate if you can, if you have the equity in your property. Work with the loan originator that you previously worked with. If you enjoy working with them, they can try to get you lower fees or what have you. But that is my personal opinion of the market. It is not obviously concrete. We do not have a magic ball. If we did, I would probably be a lot more well known than I am. But everything that I have predicted so far has actually happened. People thought I was crazy thinking that we would get busier in the fourth quarter of this year, and it's happening. It's our busiest quarter yet. So I watch the numbers every single day. I watch rates every single day. I watch the stock market every single day. I watch the 10-year treasury every single day. I look at CPI numbers. I look at unemployment numbers, employment numbers, jobs hiring. And so my decisions are not just based off of mortgage rates that we quote you as a company. They're based off the whole economic picture, and knowing that the Fed does have to meet and does have to increase rates sometimes, with all of that. So whether or not you believe they should or not, you just look at the numbers and you look at the facts, and that's how I'm coming to you with my personal professional opinion. That's all for today, and that's all I have for you right now. That is the fourth quarter 2023 market update. Thanks, guys.